Standard Bank is South Africa's biggest bank with a market cap of 171 billion rand. It has a 150-year history in South Africa and since 1990 has built operations in 18 countries elsewhere in Africa, where it also trades as Stanbic Bank. It is 20% held by ICBC of China, has a price-to-earnings ratio of 11.6 and a dividend yield of 4.7%. And Jean-Pierre, let's just have a look at the share price at this level. We are trading suitably above 100 Rand, and some would say this is fair value on Standard Bank. Do you believe so?
Many would say that. We'd also be in that camp. Once again, one saw after the global financial crisis, all our banks getting sold off, and then over the last 3 years coming back. Standard Bank has been one of those, and at the moment it's quite balanced between the upside and downside risks, in our opinion.
Craig, Standard Bank, if you thought Sasol's for fair value at 400 Rand, do you think that Standard Bank is fair value at current levels, tracking over that 100 Rand level?
Yeah, look, so I think all our banking shares look pretty attractive if you're taking it on a historic P's and certainly dividend yields, and some of them have come off quite significantly. But what concerns me in comparison to the peers with Standard Bank is they perhaps haven't got quite the same cost to income ratio. They're pushing closer to 60%, whereas the likes of FNB and Absa are actually closer to 50%. So that's a little bit concerning. And they've had return on equity, which is pretty much in line with the other, with its peers, but return on assets are just over 1%. Some are pushing 1.4, 1.5. So on those sort of metrics, I think I'd rather be looking at an Absa or FNB, although I do like the African story with Standard Bank, and sticking to their knitting on the African continent and growing looks like where they're going forward. I like that strategy, and I think in time that will play out well for them.
Jean-Pierre, this could be a concern with that cost-to-income ratio, as Craig says, at around about 60%, higher than the likes of Absa and FNB, especially since they've already gone through their cost-cutting mode. You would expect that ratio to have come down.
Yes, and it probably needs to come down in South Africa, but the reason for the group it's at elevated levels compared to the other banks is because they have been investing into Africa, and before that into other jurisdictions like Argentina and Russia as well. They've pulled back from those jurisdictions and are focusing on the rest of Africa now for growth. And that means they need to spend before they start generating profits. So at the moment, the cost of income ratio that is higher than where it should be is acceptable as long as those returns from Africa do come down the line. So with the heritage in South Africa, their challenge is to transpose that and to generate good returns from the rest of Africa while doing business in jurisdictions which might be a bit different to what they're used to.
Craig, hot or not on Standard Bank, sir?
I'm going to say not hot again, just based on valuations relative to its peers.
And Jean-Pierre, hot or not on Standard Bank?
We would say not hot, and once again we think it's fairly valued, but there are certain risks, especially in South Africa. If you look at unsecured lending, which has grown extremely strong, and all the banks have tried to get into that market, but probably at the late stage of the growth of that market, and Standard Bank is one of those. So fairly valued and not hot at the moment for us.